Hey guys, it's Christopher Mullen from thetechnicaltraders.com. I want to do a really quick video here and just show you some Fibonacci extensions, some targets on gold, silver miners, and what I think is starting to unfold. It is 8:53 a.m. on Wednesday morning, and I want to just quickly run through these charts here. So take a look at the chart of gold. This is the monthly chart going back to 2002. And really, this was the 2008 bear market in stocks, which pulled gold down substantially. That doesn't look like much in the grand scheme of things, but it was a full-out bear market for it. And then it ended up recovering and then breaking out for that big run into 2011, which we have now broken those highs. We've broken 2000, and we're off to the races. So let's just take a look at a Fibonacci extension here on the chart. If we go from the 08 lows to these highs, and then back down to these lows. Let me grab that tool again. Here we go. This gives us an upside target of where gold can go based from bear market or bull market to bull market. So we have got the first major target here was at 1824, and then we also had this previous high. It's running up, so 2300 is showing the upside potential that this run could actually carry all the way through, which is a pretty high from where we are. It's another $250 to the upside for gold. Now we are getting a little overdone to the upside here. I think we could run into a little bit of a pause or hiccup, which I'll cover that in just a second. But let's take a look over at silver real quick. Silver up 3% today again. And I'm just going to go to the daily chart here. If we take a look at silver, and we go from, use Fibonacci extension from where price flagged out here and then started its first run, major run up here. We go from there to the high, down to these lows, carry it forward. You can see where this market is, it's testing today this critical resistance area, 2675 on silver. This is the first resistance area on the chart. Whoops. Just squish it down. You can see the next key target, 2940 to the upside. That if it hiccups and has a pause here, generally we see it hit that 100% measured move. So overall, this is where, initial target could be placed to pull some money off the table. This is where silver could easily reverse and pull back down towards this this other level. Overall, it is in a raging bull market right now, and this is just a level to be moving. If it hits this level, to be either pulling some money off the table or raising your stop to start to protect things, because these are the levels where silver is going to run into some more resistance. Now, if we go and take a look at the US dollar, UUP, I don't have the US dollar index data feed, but I have UUP, which mimics that. If we were to throw a Fibonacci extension on here, we go from where the high was to this sell-off low, and then back up to this rebound high, and we carry this forward, you can see where we are in this 100% measured move. So I'll just draw on the chart so you can see a little clearer. We've got this sell-off, we've got this bear flag or this bounce, and then we've got this 618, and then it came all the way down, and we are testing this 100% measured move, meaning the dollar has had 100% of its move. It is now oversold. We're starting to see some volatility. If you notice, we had a gap here, and then we had a strong bounce. We had another gap way up here, and it sold down. It gapped higher and sold down. We are getting into some volatility, very similar to type of price action here, where you start to see price gap down and then a big gap up from the open, and price pulls back. So we're getting into volatility. It's a 100% measured move. The dollar very easily could start to bounce here, and that could mute the price of metals at this point. I know everyone is piling into metals. It is overextended, but they're on fire. And there will be a point here where they do take a bit of a breather and a pullback, which is why we need to protect gains as short-term traders with precious metals. I think long-term, you got to own a bunch and hold on to them because they are in a bull market. But as a short-term trader, we are getting into a point here where the dollar is going to bounce, and we're going to see metals pull back. There's going to be a wave of profit taking. Both of these things combined gives us a pretty decent potential pullback in metals when it does happen. So just be aware, be tightening up your stops on your plays, because we can see miners and silver and gold reverse very quickly when all these things come together and they have a knee-jerk reaction pullback. Anyways, that's it for now. Take care. Bye-bye.